So next we're going to look at the authoritative accounting standards for both governmental and NFP organizations. On page 7 of your Chapter 1 notes, you're going to find a table like the one on this slide. And it's going to list your state, local, and federal governments as well as NFPs. And you'll need to follow along with this part of the lecture and fill in the blanks in regard to whether the entity is public or private and who sets the standards for these entities. For state and local governments, the Governmental Accounting Standards Board, or the GASB, sets the standards. For NFPs, not-for-profits, the Financial Accounting Standards Board, or the FASB, sets the standards. This one should be familiar for you guys. They oversee for-profit entities as well, so you should be familiar with this. This is who, when you're doing your research during the graduate program, you will typically be researching FASB ASC, right? So. For the government, for the federal government, the standards are overseen by the Federal Accounting Standards Advisory Board, or the FASAB. So we've got different organizations that set the standards for each type of entity. Now, let's decide whether these are public or private, and how do we know? Okay. So to help us, I have included some notes. When we're trying to decide if an entity or an organization is a public organization, we must decide who owns it. For it to be public, then the government needs to own or control it, right? You should think simply general public. These entities will relate to the content that we discuss in chapters 1 through 8, dealing with state and local governments, as well as chapter 11, which deals with public universities, kind of like Missouri State University. When it comes to private organizations, we will be looking at entities not owned or controlled by the government. This includes two major groups, not-for-profit and for-profit organizations. In the textbook, we'll learn about private NFP entities in Chapter 10, as well as a bit about private universities in Chapter 11. So you should use this information to complete the tables in your notes. Just remember, state, local, and federal governments are considered to be public entities. NFP are private entities. Okay. Now that we have a grasp on the types of organizations that we will be doing accounting for, let's discuss a little bit about the basis of accounting and measurement focus that we will be using for this type of accounting. So here, I think it's important to discuss the consideration for what type of accounting we are doing. I find it is helpful to consider when items are recognized for accounting purposes. That's how we're going to determine what basis of accounting that we are going to use. One of the biggest differences, so this is going to continue the conversation about the differences between for-profit and government accounting. And one of the biggest differences for us is when revenue is recognized. When do we recognize revenue in government accounting or NFP? This can be a little frustrating in this class because our full accrual accounting brains tell us to recognize revenue as soon as the goods are received or the services are performed. This is an exchange-based transaction, and the recognition at its most basic level is simple. Did you perform the service? Did you give them the good? Right? However, in government, most of our transactions are non-exchange based, meaning there's no real tangible good or service received when you pay, right? The best example for this is taxes. For example, property taxes. You pay property taxes on your vehicle, your boat, your house, your car, any kind of real property that you own. And simply owning those assets triggers an obligation to pay that property tax. Governments will record revenue for a tax if it is levied this year and collected this year or soon enough after the year to still meet current obligations. So that is why we say in government accounting and modified accrual basis of accounting, the when, that revenues are recorded when they're measurable and available. This is the fundamental rule for modified accrual basis of accounting. Outflows in modified accrual basis accounting are called expenditures and are recorded in the fund when a liability is incurred. So as soon as you incur a liability, you record the expenditure, which is a little different than what we do in full accrual accounting. So an important note here, and I would definitely write this down, governmental type funds, so that governmental type category, are the only fund types, that use modified accrual basis of accounting. All of our other fund categories use full accrual accounting. So, as a quick review, the modified accrual basis of accounting is only used for governmental type funds because taxes, which can only be levied by a government, are the primary source of revenue in the fund, right? So you're performing a governmental type activity, so it goes in a governmental fund, and governmental funds are the only ones using the modified accrual basis of accounting. These taxes and other governmental revenue resources do not involve exchange transactions, so it would be difficult to recognize that revenue, to determine when to recognize that revenue if we used full accrual basis accounting, so we use this modified basis of accounting. And the revenue recognition for criteria for governmental types funds is that the revenue must be measurable and available, meaning measurable, it can be measured, has a known value, and available means it will be collected during the current year or within 60 days of year end, which we consider in this class to be soon enough to still meet our current obligations. I would take a note of that. To me, that is a very important thing for us to know in this class. We consider 60 days, within 60 days of year end, to be close enough or current. So let's look at the measurement focus, or the what of what we're accounting for. So the accrual basis of accounting, which you're very familiar with at this point, uses what is known as the economic resources measurement focus. General recognition and expense rules apply when using this measurement focus. You recognize the revenue when goods or services are received or performed and match the expense to the revenues that it helped to generate. In this class, our proprietary funds, which are business type transactions, fiduciary funds, and government-wide financial statements are going to use this economic resources measurement focus, right? So primarily in this class, you're going to be using the full accrual basis of accounting. However, it just so happens that we're going to start the class discussing the one fund category that uses the modified accrual basis of accounting, which you use in conjunction with what we call the current financial resources measurement focus. Recall that only the governmental type funds use the modified accrual because they are the only funds whose primary revenue sources are taxes, which can only be levied by a government, and it is a non-exchange transaction. So if I were you, I would just think of the basis of accounting, full accrual or modified accrual, as the when, and the measurement focus as the what, as far as the recognition of transactions is concerned in this class. For the measurement focus, the current financial resources measurement is focused on the current resources of the government, not long-term. It makes sense, right? It's literally in the name. Current equals current. Just think of it that way. In fact, there are some long-term resources that are not taken into consideration when preparing governmental type fund level statements. We'll get into that in the future. Just know that it's a thing. Just for right now, just remember current equals current. Current financial resources measurement focuses only on the current resources available to the entity. In contrast, the economic resource measurement focuses on all the resources, not just the current resources. And the easiest way, so this is all your long-term, your short-term capital projects, all that good stuff. And the easiest way to remember this is to just think E equals everything. When you see economic, think E and think everything. You are looking at all of the resources available to the entity at this point. So finally, this slide could be useful for you, so I've included on page 9 of your Chapter 1 notes as well. It shows all 3 of the different fund categories and the basis of accounting and measurement focus used by them, as well as the primary purpose of the fund type. Please, please, please fill out your notes accordingly and become familiar with the summary table. It is very important that you understand these and you know what kind of accounting we do and how we measure that in those fund types and what those fund types are used for. So, as I've mentioned a few times now, the concepts introduced in this chapter and in the next chapter are going to be critical in building your base of knowledge for the remainder of this course. So it is very important that you understand the material presented here. If you do not, please, please, please do not hesitate to contact me and we will discuss it further.